The official peak of inflation was back in June of 2022, when we reached a level of 9.1% in the US and 10% for the Eurozone in December of the same year. Since then, inflation markers have substantially gone down. Many factors contributed to the slowdown of CPI numbers. After reaching a high of $120 per barrel, crude oil prices dropped to around $60 mid-2023. Soft and hard commodities also drifted lower during the same period. Furthermore, because inflation was running at elevated levels, a natural normalization of the numbers comes from the base effect. Lastly, and probably the most impactful, was the monetary policy tightening pursued by central banks around the world. Moderate inflation is healthy for economic growth and the constant increase of money supply in the system. An elevated level, though, has adverse consequences. It can negatively impact interest rates, which then cascades into the entire economy. As rates rise, cost of lending goes up for corporates and consumers, affecting profits. Liquidity becomes scarce and lending less available for continued economic expansion. Capital spending is also affected, hindering growth. In such environment, bonds tend to suffer. In the equity space, cyclical stocks, small and mid caps, underperform quality companies and mega caps. I think we are probably going to have a volatile time this year due to the effects of monetary policy, which will only be fully felt in 2024. Now, this could lead to a stronger than anticipated drop in economic activity. There's already a noticeable slowdown in the interest rate sensitive sectors, where borrowing costs play a large role, such as real estate, the automotive industry, and leveraged businesses. In the current reporting seasons, we've had a few earnings disappointments so far, mainly due to the headwinds we touched on. I suspect that this trend will continue going forward. Looking ahead, if we manage to avoid an economic shock, we'll go into a consolidation phase for the better part of a year before markets are able to trend again.